Good afternoon, everyone. Welcome to today's daily recap. I'm Evan Lazarus. I'm the CEO of T3 Live. And on the heels of my morning call today, just want to follow up. Today's price action was very, very weak. From basically the get-go, the market, here's the spiders, opened and just, traded lower. We did, tail up late in the session. If we look intraday here's a 15-minute chart. You can see, the selling basically from the first 15 to 20 minutes of the day. Market sat on its lows from roughly noon until 3 o'clock, and then at 3 o'clock you saw a little bit of a snapback in price. Not very bullish action. We did hold the lows from, I guess it was Wednesday. Let me go back to the daily. You can see that. But now we clearly have a changing in the guard in that the market has definitely taken on a different composure. Whereas typically we've seen bounces that will rise. We've been notoriously V-bottoming for years and years and years, where we would get this. The market would find a low, and then it would just start to turn and go. We've seen that trade several times. Where this time around, what we saw the last couple of days, and again, a couple of days doesn't necessarily dictate, a new trend, but what we saw was a low, a bounce on lighter volume that I talked about, and then today's selling resuming, and notice the volume today expanding on the sell-off. So, to me, it looks like something is potentially changing in here now. Next week will be very interesting as I flip over to a weekly chart. And I've talked about this, I do my nightly videos for the off the charts subscribers. But I talked about, where the market has come from. I've talked about big picture, showing you the bottom of '09, this rising trend, and how tight this market has become. Is this one giant, rising wedge? And if so, is the market setting up for a break of this downside trend line? There's lots of possibilities, and I know lots of chartists and technicians are, have been looking at the big picture and the short-term picture and trying to make heads or tails of, what to do. I think that, rather than talk about, the last 6 years, I think it's important to talk about where, what the reality is in the near term. I think the reality in the near term is just, focusing on key levels. Key levels to me would be somewhere, the market somewhere trading possibly back into those the October lows. Into this general area to me is your larger, more substantial support zone. And if the market does really want to accelerate, I think what you'll see next week is, if we can't immediately turn back up, come Monday, Tuesday, Wednesday of next week, we could be testing into the December lows back here, and possibly even breaking through there to retest into, like I said, this larger support zone, let's call it. So I think it's you have to be flexible here, and the reason that I say that is because the market clearly didn't really want to make new highs, and when it did make a new high, just a few weeks ago, it just seemed like buyers weren't there. And let's take a look at the daily just to kind of put it into perspective of what I'm talking about. So the market made new highs. We broke out of this range that we were in for a couple of months. We broke out of this range and we got into this area. There was no real buying. I mean, in a sense, we got this one up day. The market broke. Let's just kind of put it back up here. We broke out here. We got one up day, and then we just sort of dwindled. Anybody that got stuck buying a breakout or buying new highs, is now firmly underwater. And if we can't really turn up and recapture some of this downside, then the market's telling us that we could be looking to retest here into the bottom end of this, what I call this, the roller coaster of the last 2 quarters, where you really, going back from October, November, it's been a roller coaster. And the market, while it's had moments of bullishness, it's also had moments of bearishness. And net just not making a whole lot of forward moving progress. It's just one big kind of range, if you would. But this range is what we have to work with, and this is what we need to focus on until something ultimately changes. So I think that based on short-term price action, it could tell us that we could be heading back for a test of this lower end, and you're seeing that I think more so now with some of the more widely watched names, especially in tech land. It's been a wild ride. Stocks like Netflix. And again, I'm just picking out kind of random names here, but starting to act a lot more bearish. If you look at the weeklies, testing into resistance and starting to act very peculiar into prior substantial resistance zones. Could we be setting up a larger move back to the lower end of the range? It's definitely possible. You talk about Amazon, a stock that's had, many stocks that have had these massive, 30-40% moves in just a couple of weeks, starting to really, feel the market up here at this level. You're just not seeing buyers step in here. So these stocks could be setting up for, larger pullbacks or declines. Apple, we look at Apple, and Apple's had a major rise in price. I said this morning, keep an eye on this channel that Apple has been in for the better part of the last, 2 years, having, tested topside recently, could be setting up for a larger, drawdown. So, be very, very cognizant of not only the short term, but how that kind of corresponds with the longer term charts. As, many stocks and many indexes are very, very key, or could be at key levels in and around this area. Again, it's not an exact science, but it's a business of probabilities. So we look at patterns and areas and how they react in those areas, and based on that we can make assessments about what potentially could happen next. So that's kind of my key thoughts for looking forward. And look, anybody can make an argument that we can go higher, and anybody can make an argument that we can go lower. But what ultimately matters is that what price tells us. So we need to watch price very carefully and levels, key levels, into the next week, 2 weeks, 3 weeks, as they will give us clues. If we do continue to go lower here. If this does continue to drop, and we do, pierce this bottom range, I suspect if we do pierce that, we could then snap back and then, roll over again. So, be very cognizant of how price reacts down here. We did hold this level come, I guess it was Wednesday of this week. And you can see, this was that first, initial move up, that pullback, and then we rallied from there. So now we're back into that zone. If if Wednesday's low gets taken out, that could be your clue that something more substantial is occurring here. So in terms of taking our cues from the market, keep an eye on those short-term levels right now. As far as trades, there's lots of trades on the board. Almost anywhere you look, you could probably find compelling price action. High flyers like Apple and Priceline and Amazon and those kinds of names, they're certainly moving. Some of them are moving down. We've seen large moves down in Tesla and LinkedIn. I mentioned this morning, LinkedIn, broke below its range today. There's my funny blue line. Let's change that to black. LinkedIn, broke below. We'll see if that's, again, the precursor of something larger happening. And I covered that LinkedIn, this trade, in today's morning call. So, whether you're looking at financials or banks or tech or industrials, I'll show you. Here's Caterpillar. Again, Caterpillar, if you look at a weekly, Caterpillar, flirting here with a pretty substantial support level going back, several years. So, there's some damage being done, I think in many, many different places. So narrow your focus. It's not necessarily my job to tell you what to trade, but it's my job to kind of highlight, overall price action and what I see occurring. And there's lots of opportunity for active traders. Credit card names, Mastercard. Looking at here's a daily. Starting to look a little weaker here. We've seen large rises in price for many of these names. And you can see this. You can see this topping process. Well, at least for now, you have these highs. We break, we bounce, and it looks like we're now setting up for potentially a larger move down. So, like I said, have a very, do yourself a favor. Get yourself a good watch list. Make sure you know where you want to be and why you want to be there. I will tell you that between, for those looking for trade ideas, the Cooper report, Jeff Cooper's nightly and morning report have been phenomenal. Off the charts is always a good source for trade ideas for those that are swing traders. The VTF, Redler's morning note. I mean, there's so much content that we put out there on a day-to-day, week-to-week basis that if you're not, if you find that you're not really getting the results you desire in this market, or you're not making the kind of money you think you should be making, chances are you're just not in the right place at the right time. So make sure you use the information that we can provide you to help, narrow your focus. Because, again, a good trader with a good focus and a good watch list is really the difference between sometimes a trader that's, throwing darts at a wall and someone who's got a laser focus. So that's my 2 cents there. And I hope everybody has a wonderful weekend, and I'll talk to you later.